Hello guys, welcome to the Trading Parrot. As you can see, September so far is showing a performance quite in the range expected for September. In today's video, we're going to look into the monthly time frame and how we are bouncing from this level and what I'm expecting to see for the remaining of the month and into October. Make sure that you do not miss the analysis of the CME futures for this weekend. Very important information before you decide to take any trade. I'm also going to do a full analysis on the daily time frame on RSI. What are the most likely things that we should be expecting for the upcoming days if you want to stay on the safer side. And of course, we're going to cover what's going on with the open interest, the megaphone pattern. I'll cover the weekly time frame on the RSI, and we'll try to make some sense of what happened yesterday, and if Bitcoin continues to follow this behavior of looking this liquidity, what could be the next liquidity to the downside for Bitcoin to grab. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. Let's get into the content. Today we're going to start with the monthly time frame, and as you can see, the price of Bitcoin is bouncing perfectly on the same trend line that we plot almost a year and a half in the past. To be fair, on the month of August we already bounced, and that was at around 49k. In the month of September we can see that the bounce is at 52.4 as a result of the trend line going higher. In the video I published on Thursday, we highlighted the fact that there seems to be not just some price action in common for most of September in the past, but also a very common fractal, which is to come from higher prices in the month of August, dump into September, and somewhere around the second to third week of September to see a small bounce in the price. That we can call the fake out bounce, because as you can see, it doesn't manage to exit the box. In fact, it just tempts people to think that we're gonna break out bullish from the top of the range. But in fact, right after that, it just goes sideways. You can see that price action in September in 2020, in 2021. Even in the bear market, we noticed that we have some very similar pattern. And in October in 2023, once again, we have a move like this, and then we start creeping up. And once in October, which is the second half of this rectangle, we start the push up to resume the bull market. Of course, that is not the case during the bear market, which in fact we do go higher in October, but in this case we had the FTX crash and we couldn't complete the pattern. Less than 3 months after, we can start seeing that the highs start printing. So if we were to see something like that in this particular monthly chart, we could see the 52.3 holding and then October starting to print the new highs and eventually breaking out from here. That is one option. And the second option is that September continues to be slightly more bearish than it has been already, hitting possibly this area in here with a long wick, and then eventually in October start the recovery, but from lower prices. If we look into the past performances of September, we can see that the average is in the red, but it's not as substantial as most people might expect. We have an average of -5 and a median of -6. And in the equivalent years, starting with 2020, we have a -8, 2016 is positive, and we don't have 2012 in this particular table. The thing that has got most of the people quite concerned, including myself, is the breakdown of the S&P from this trend line for a second time. In this case, is a breakdown of a retest against the resistance, or a dead cat bounce if you want, and the potential for completing a double top in this area here, which is quite a big double top. It lasts for almost half a year, the formation in a weekly time frame. And if this double top was to break down lower, it will hit more or less the 4.6k that we have as our support, and previously was the resistance at the top of the bull market of 2021 conveniently. We continue to see a sell-off from the Bitcoin spot ETFs with 170 and 211 right after one day where the sell-off kind of slowed down, which was the 4th of September. Looking at the chart, it still doesn't look as deep as the drawdown that we saw in June in 2024 or in May in 2024. I will start getting concerned if this 16 got somewhere into the 14 because I'm doing so much could start becoming too scary for investors. And we are on the weekend, and what we usually do is to pay attention to what's going on with the CME futures. CME futures close at a price of 52.9, pretty much 53K. So what I wouldn't like over this weekend, of course, is to see the price showing some sort of recovery into the 56, 57, finding resistance somewhere there, and then since the CME gap tends to get filled, the price coming back down to revisit the 53K to take that liquidity, because that will be perceived as the perfect retest of the breakdown to lower prices, and it will tell investors that we are quite likely to continue going even below the previous low that we had beginning of August. Something that I will quite like to see over the weekend. I will get really excited if we continue dumping over the weekend and we go and take the 46, 47 liquidation levels that we're going to observe later in the video if they're still there. Close on Sunday somewhere here and then get the magnet back into 53K. If we do that very quickly over the weekend, filling that gap, it will make it look like a large wick to the downside, a liquidity grab, and it will increase the chances of a reversal to the upside. So as you can see, not just the timing and the price matters, but also the order of the events. As we've been discussing during the week, the daily had a breakdown, and now we are at these prices. What I will be looking for is potentially seeing some retest in here, some sideways, and some continuation of bearish price action. Of course, we need to be prepared to be wrong on that, and we need to prepare this line in there. And if we were to see an RSI on the daily crossing above 39, closing the day above 39.40 RSI, that could become quite bullish, and it could show that we are printing one low, a higher low, and then another higher low, potentially hitting this resistance in here later in October. We still need to be prepared for another rejection and potentially breaking from slightly below and still going into a rally for October. Remember that we can have a rally in October. That is what the past performance is telling us, but we could still have a very small fake out rally in the middle of September, potentially closer to the times when the rate cuts are coming. The open interest is still holding strong regardless of all the bearish price action, is still in this range above the 15.5 billion, which has held us through the past 7 months in the price of Bitcoin. Typically, from this area, holding the open interest somewhere there has led to rallies of over 20-25% to the upside back into the top of the range. So from the point of view of the open interest, I remain positive until we break below that 15 billion. You can check this website on Coinalyze. This chart is for free and it shows the aggregated open interest of Bitcoin. I use it on the daily time frame. And many people are getting excited with this potential low in here, a lower low, and then a higher low, which is kind of a bullish recipe for a reversal. Some people might interpret it as a inverse head and shoulders. The point is, as long as we hold somewhere around here without putting a new low, it remains bullish. But I could argue that even if we get into here and we do a strong bounce, it's still bullish, but it all depends on the timing. We cannot come here and then start going sideways, remaining at those lows. What we have to do is touch these lows, take liquidity, hit the longs, punish them, and then reverse very quickly to the top of the megaphone. We are on a Saturday and the RSI weekly is at 44, which is lower than the RSI of 45 that we experienced on the 28th of August in 2023. This was precisely the area where we bounced stronger into the bullish market. And there's plenty of investors that are quite scared of losing so much momentum in here. I'm still looking for the weekly to challenge this dotted line. I don't know if we can really make it later in the bull market back into the stops of 80 or 90, but I think it's not too much to ask to go for a retest at around 64. And if we were to get to an RSI weekly of 64, that takes us almost to 80K. So I wouldn't complain with that, to be honest. If we were to do something like that, it will look pretty much similar to what we had in 2021, where we had a top in January and then the next top was lower. As you can see, the RSI broke down in here and then it did a dead cat bounce into 69 RSI. In this case, we break down in here, we fool around somewhere due to the economic crisis or whatever is going to happen in the next months, including a recession, and then eventually we come to hit 64, 65 for another dead cat bounce. It's an interesting approach which I wouldn't discard. We're currently in extreme fear, as you will expect right after all this price action. We keep insisting that we are not decoupled from the S&P and the Nasdaq. At least every time those indexes have a big retracement, Bitcoin follows through. I think all the eyes are at the moment on whether the interest rate cuts are going to be 25 points or 50 points. 50 points are interpreted as something to be scared of, and that is because people think that if the Fed needs to cut so much the interest rates, that is because the economy, there's something really ugly and broken, and that the recession is going to be a hard landing. Therefore, no one really appreciates too much too fast. Looking in the past performance, big cuts in the interest rates are associated very oftenly with a large crash in the S&P and Nasdaq. I think at this point, people prefer 25 basis point cut. We all know that they are cutting too late, and only cutting 25 will trick investors to think that there is nothing broken yet, and potentially they might manage to relax a little bit further. What happened yesterday? Why we went to this area? We talk about it for the full week, and I hope you've been watching my videos, but if you focus on this area in here, I publish it so many times on Twitter and explain why it's high likely that we go there regardless of everything else. Past performance of Bitcoin on September, bullishness towards October. There were many bullish signals. I share all of them, but I told you that I was going to buy, but I was gonna save cash potentially because this is just too much of a strong magnet. I wanted to still buy just in case we get faked out and we never come to 54, but we did. So I ended up buying at 53.5. This morning, I'm noticing that the price went as low as 52.5 and it left behind a little bit of green in this area, but if we zoom out, you're gonna start noticing that a new red comes in play, which is another area of liquidity pools that we've been talking for over a month, and that is 46 to 48. And this one is substantially larger than the 54K. So far, we are bouncing off this due to all the force closes that are currently happening. There are some buys in there. I also have my buy there, and I assume that some additional people were thinking to buy 55, 54, and 53. Now, I'm not gonna be surprised at all if we go to 46 to 48, and I will set my buy orders once again in there in the expectation of eventually seeing some dead cat bounce stronger into the highs. I don't know how long it's gonna take. If recession comes in, I will expect that we go slightly lower, and that is gonna be a little bit painful. I have dry powder for that. But if we were to start seeing a rally into mid-September, which is just 1 week away, or the 18th of September, we could potentially go somewhere in here to grab liquidity from 63K. Maybe with a little bit of additional luck, we can get to 67, as you can see, is there. But more conservatively, 61 and 64 are not that difficult to get to. We have plenty of fair value gaps to the upside. There's a full path of liquidity for market maker to take once there is some sort of bullishness back in the market. And looking at CoinGlass, we have the same picture. We have now go beyond the 8 billion, counting just the past 30 days, getting very close to go beyond, to go above 9 billion. And on the lower end, we have substantially less liquidity in the past 30 days, of course. Something interesting is happening. We can see that now 50K has started building a ladder of buys, and although the largest whales everybody is selling, you can see the purple and the brown here, 100 to 1 million, a million into 10 million, but there is an interest increasing in here to buy. How big is that, and is it comparable to the past times where we bounce? Let's have a very quick look into the yearly chart, and you can see that at around 37K, there was a ladder in here as well. That was 100 million. Right now we have 70 million, so 70% of what this was, and this catapulted the price into 73.5. Let's look at the past 3 years. Again, we have the 100 million that happened early this year, and you can see that in these areas of here where we started bouncing, we have barely 50s and 30 million, and at the bottom of FTX, again, there was 100 million. During the bear market in here, there was 85 million, and what we currently have is 70 million. So it's not that far off to potentially produce some sort of bounce from 50,000K. So we are not that crazy to think that maybe that 70 million could help us in some way to bounce somewhere in the middle of September. And again, that just increases the chances of that happening. It doesn't guarantee anything. On the order book, we can see that finally, we are seeing some yellow at higher prices than 46 and 47. We got some buying at 51.7 and at 50.8. Just a few days ago, there was absolutely nothing in here. So that is somehow positive. The delta of longs and shorts, you can see that is quite heavy on the short side at the moment. If we look back in time, we can compare it to the 5th of August when we went to 49K. And right after that, we have a big bounce into 65K. At the moment, there are shorts, not as many as that, but a lot more than in the past month. Something really interesting is happening when it comes to the Bitcoin dominance, which obviously we monitor to keep an eye on what's going on with the performance of altcoins. And as you can see in here, we are bouncing from the top in the Bitcoin dominance, just 1% down, just like we did a few days ago. You can tell that 58% dominance is being quite tough to beat. Dominance takes its time to break through levels. Sometimes it takes many weeks, like in here where we struggle to go beyond 54%. And eventually, even though we had a bearish engulfing candle here, we continue our trajectory to the top. There's an expectation to get somewhere to the 60% just before we collapse the dominance, allowing for the altcoins to perform. And this is, of course, coming with some decent performance when it comes to the alts. Today we are at 29 in the altcoin season index, pretty similar to what we saw mid in August. Something I wouldn't have expected to see this early, just because Bitcoin is showing so much weakness, and seeing the altcoins to start performing is quite a little bit off in terms of timing. At the same time that we see that performance, I'm seeing total free going beyond the support of the weekly trend line that has held us throughout the bull market. And I'm hoping to see this week to the downside to get bought up right before Sunday, because I wouldn't expect many good things from a breakdown at these levels at this time in the market. We already have a huge punishment from the top of the range, from 90 back down into 42. That is 50 points of RSI down in a very short time. And then to continue going to the downside, that will take us to levels that are only seen in a black swan event like a pandemic or a recession. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you additional $500 for free to trade any of the coins shown in the screen. All you have to do is go to the description in this video below and activate the top link to be able to be part of this promotion and see the instructions. I also have a link to open a new account on Bybit to unlock up to 30,000 in rewards. Have a look at the referral link in the description, and remember that if you are trading with my link on Bybit, you do not have to pay any subscription on my website to access any of these perks. Guys, thanks so much for watching. I'll see you in the next one. Take care. Bye bye.